Thank you, and we'll talk about the financial statements. Just for anybody that doesn't know me, I'm Mike Zubak from MNP out of our Lethbridge office. I've been working with municipal clients now for 26 years, so I have a very good understanding of kind of the needs and requirements of municipal audits and what's required there. So we'll get talking about financial statements for the Municipal District of Taber for December 31st, 2020. We've had a number of discussions with management, and we reviewed the statements in deep detail with council. So we're going to do a high-level review of the financial statements, and if there's any questions like the Reeve has suggested, we can answer those at the end. So the first thing we want to talk about is management responsibility. So management is responsible for the financial statements. They are the MD's financial statements. The council's role is to ensure that they're getting the information to make decisions for the benefit of the municipal district. Our role is, as the auditors, we come in, we're independent, we review the information, and we provide our opinion on the financial statement. So that's kind of just the last part of the financial statement, or the last part of the management responsibility. The next page I want to talk about is the independent auditor's report. And probably the most important part of the whole two-page audit report is the first paragraph. That's the opinion. And we'll look at a couple of these financial statements. We're not going to look at everything in the financial statements. Like I said, we did a deeper dive with council and management in previous meetings. However, the financial statements do provide a clean opinion. So there was no issues noted. So that's all good. The other part of the audit report that we do want to note, of course, is that in the prior year, financial statements were audited by a different auditing firm. They also issued a clean opinion. We had to assess the firm in the prior year and did that, and we had no issues with their opinion. So again, clean opinion last year, clean opinion this year. I do want to go to the statement of financial position. And kind of talk about some of the highlights on the financial position for the current year. So a couple key things here. We can see that cash and temporary investments are up quite a bit over the prior year. A couple things within that. So there's $27 million. However, $14 million of that is set aside for capital reserves. So that's money that's going to be used to replace and upgrade and do capital things as we go along. Another $7 million relates to money that we've received from federal and provincial governments that is going to be used for projects as far as capital. And that money has been deferred until we actually spend the money. So the money hasn't been spent yet. So that was another $7 million. And there's the new horsefly spillway project, and of that $7 million that's deferred, 3.7 million relates to that project alone. So that project is expected to be in a couple of phases and probably will be about $48 to $50 million when it's finished. However, once that project's finished, it's going to go out and be the asset of two different irrigation districts, one being the Taber Irrigation District and one being St. Mary Irrigation District. So that will not show up on the books of the MD. However, the MD is in agreement that they're going to manage the project until it's complete. Grants and taxes have gone up a little bit in the current year. And basically part of it is due to linear, so oil and gas being a little bit slow to pay, but also some of the residents have been a little bit slower to pay than in prior years. So that has gone up, but hopefully we'll see some of that go down. There's still some stuff with the linear that needs to be dealt with. So that'll be the big thing that'll kind of come up in this next fiscal year. As far as the trade account receivable, a couple items there to note. So it's up over $1 million from the prior year. There was disaster recovery money that was kind of waiting to come in. It still hadn't come in by December 31st, but came in after that. And also the Vauxhall Rest area, there was about another $800,000 that kind of wasn't there last year, that at December 31st was still waiting to come in. And of course, that money has kind of come in after year end. as far as the financial assets, most of the other stuff is pretty comparable to the other year. So we won't spend a lot of time on that. Under the liability section, we can kind of see that, like I talked about before, deferred revenue has gone up quite a bit. So 4.8 million versus 7 million in the current year. And that relates to the spillway. So that's a big part of it. And of course, there's some other capital projects that are taking place, but the spillway is kind of the biggest one that's changed the deferred revenue. Under liabilities as well as the long-term debt has decreased by about 300,000. And that's just the normal debenture payment, and another 300 plus thousand will be expected to be repaid in the next fiscal year. Overall, the MD is in a good financial asset position. So we look at the net number there and we can see 17 million, just shy of 18 million, almost at 23 million in the current year. So again, very good indicator of financial strength and ability to offset and repay liabilities as they come about. So, and the big piece that kind of related to that in the current year was the fact that there was a big surplus. And we'll take a look at that surplus on the next page, because part of it related to capital, which was increased significantly over the prior year as far as capital grants. On the net financial asset side, so our capital assets or tangible capital assets didn't increase a whole lot. Reason being is that there was a lot of purchase of capital, just under 5 million, but the capital assets that we purchased in previous years we've used for another year, so we had to amortize them or write them down for the use of the year. So those kind of offset each other, and plus there was some sales of some of the older capital assets. So when you factored all that in, the change was very modest, a couple $100,000. Overall, though, again, a good accumulated surplus, so 157 versus 152 last year. And when we look at the audit and we look at the numbers, some of the key things that we look at are things like cash balances, net financial assets, whether it's in a positive or a negative balance, and the accumulated surplus and what makes up those balances. So all pretty strong. And within that accumulated surplus, there's a big amount that's related to your equity in your capital assets. Plus there's also equity in reserves, plus there's also unrestricted. So that's money that doesn't have any capital restrictions or any operating restrictions on it. It can be used for whatever purpose. And that's a pretty good amount at just under $10 million. I'll go to the next page and talk about the statement of operations and a couple key items here. So if we look overall at the bottom, as far as total revenue didn't change a whole lot. It only went up by a couple $100,000. A couple key things that did change though, within tax, of course, the linear was down a little bit. So that kind of decreased the tax revenue. However, it was kind of offset by some of the grants for operating. So there was a new grant that was given to municipal districts called the MOST grant. And in the current year, that was 731K. So that wasn't there last year. And so that was kind of the big change. And then there were some other little changes within that, but the biggest change was that new MOST grant. And rental revenue, that went down again because oil and gas leases were down. So that was kind of the key things on the revenue side. As far as expenditures are down, as we can see. So from 21.2 million to 20.7 million. And again, overall, there was a number of different changes within there. So salaries were down overall, about 735,000. So we had some individuals leave the organization and those positions were not replaced, and just retirement and stuff like that. So I think the biggest thing was people, some people left the organization. Consulting fees were down significantly from prior years. So there's a number of different projects going on. So those were completed and there was not as much consulting this year. Grants and payments to other organizations did increase. So there was a new agreement with Iracan, which is part of St. Mary's River Irrigation District. And so we received some grant money for that, and then that got paid out to Iracan. It was about $322,000. So that went up. Bad debts went up a little bit as well, due to the fact that, of course, the oil and gas was struggling in the current year, it continued to struggle. And there's been a large buildup of some of the property tax on the linear from the oil and gas. So that increased by about $370,000. So those were kind of the key changes in the expense side. So overall, we ended up with a surplus before any capital grants of just over $1 million. We can kind of see there. And then if we go down, we can kind of see that there was a bunch of capital transfers relating to the different projects that were taking place. The biggest one being the Vauxhall Rest area. So there was $1.8 million transferred from different levels of government, provincial, for that. There was also bridge repairs, which are another $600,000, and drainage project was about $900,000. So that was kind of most of the capital transfers, or the big main ones that happened. And as a result, because of that, with the capital transfers, the surplus was $5.2 million for the current year versus just shy of $1.1 million in the prior year. So that resulted in the surplus, the accumulated surplus, increasing to 157 million versus 152 million. The other thing I want to look at quickly is the cash flow, and that will probably be it for the financial statements. So I'll go to the cash flow here. And a couple of things to kind of highlight here. So kind of right under the very last line of the operating, you'll see the cash flow provided by operations. So we can see it was $6 million last year and almost $10 million this year. So the operations are strong, and they're providing cash flows, which is allowing the MD to do things like purchase capital and continue to do that. And we'll see that here in a second. The two big things within the operating, though, of course, we had the surplus, trades accounts receivable. So we were waiting for about $1.1 million change from the last year to come in. So of course that stuff kind of came in afterwards. And then under the deferred revenue, we received a bunch of money, but we hadn't spent it yet. So that increased our cash flow significantly. So that money will get spent, and we'll probably see this cash flow kind of go back down a little bit next year, or maybe back down to the $6 million level. But from the operating cash flow, the MD was able to, on a net basis, after sale of some older equipment, purchase $4.7 million of new capital assets versus 3.3. And as a significant MD, you're going to see those large capital purchases likely every year. There's going to be something going on. Also, the restricted investments. So this relates to the deferred revenue. So that increased by $2.1 million. So that's kind of an outflow. We put that into other cash, which we can't use unless we're using it for that specific purpose. So overall, the cash increased by $2.6 million, just and a change from the prior year was $1.4 million. So some good positive cash flow changes the last 2 years, which has increased the amount of money in the bank. So of that, like I said, $7 million of that 27 million is spoken for and is restricted to deferred revenue that we have to use for those specific capital projects. And also of the $20 million, there is some restrictions within some of the reserves that council has set up for replacement of capital property. So I won't go into any of the schedules or any of the notes. You can definitely see those online for sure, but that's kind of a summary, high-level summary of the financial statements for the Municipal District of Taber for December 31st, 2020.
Okay, thank you, Michael. We appreciate you being here with us tonight and explaining the financials to our audience. Again, if you have questions regarding the financials, if you'll hold them till the end of the evening or to the end of the presentations, and then we'll get to those questions. Before we go on to our next item, I just want to take a second here and thank all of our staff for all they do to keep the MD going. Whether you're working on a road grader, keeping the water treatment plants going, maybe a summer student mowing lawns, or here in the office doing administrative work, we just want, on behalf of council, we want to say thank you to all of our staff. And I believe we roughly have 75 staff, give or take. I think that's the number that we have right now. Again, so just on behalf of council, we'd like to say thank you to our staff. Next, we're going to go to a video from Paul McLaughlin, who is the president of the Rural Municipalities of Alberta Association. And following him, we're going to have Brian Badur, the director of corporate services, give us an update on uncollectible taxes.